It's a real privilege to be here with this audience, with these speakers and these panelists, and to reiterate the points of the CEO said regarding where Kenya falls, where East Africa falls as a regional hub, as Kenya falls as a regional hub for investment into the region, and increasingly we're seeing that. So this conversation here, and the ongoing conversation that we have resulting from this event, I really hope help to support and catalyze growth within the region. As a Kenyan coming home, working here, supporting investment into Africa is fundamental importance to me. And I think I'm joined by experts who can support this conversation. Let's take this further. So, oftentimes I try not to get mic'd up because I can hear myself almost bouncing on the wall. So apologies for perforating anybody's eardrums in advance. The discussion today on the major macroeconomic factors impacting East Africa's built environment, as I mentioned, geopolitics, trade, elections, and a complex world order. It's every year control risk since about 1975 to 76 has produced what we call the risk map. And risk map are 5 thematic risks that we track globally and then apply locally. And this year, the thematic risks relate to the great realignment, uncertainty paralysis, climate disruption, trust deficit, and risk management overload. And each of those subjects, I think, have been touched upon in one way, shape, or form already by Riddle regarding some of the things that he's tracking. And when we talk about the great realignment from a control risk perspective, we're looking at the influence, increased influence of the GCC, the Middle East, of India, in an increasingly multipolar world. We're looking at the role India had, for example, in the accession of Africa into the G20. And there is going to be a return on that investment. We're asking questions around what does that mean for our region? And we see an increased appetite to invest in Sub-Saharan Africa. But the caveat there is the bankability of projects, the availability of projects. It's not the availability of capital. And we've seen that, for example, the Qatar Investment Fund has redeployed about 93% of their capital for investment in recent years. The uncertainty paralysis, we're looking at the US elections, the US politics, and the Chinese economy. And we've seen that play out, and we've seen that play out as we speak to the complexities associated with that. Riddle mentioned the weather, Dubai, for example, in recent times, in the last 24 hours, should I say. Last year and the year before, we were tracking in the Horn of Africa, 24.7 million people affected by drought, the fourth year, so the fourth rotation of drought, significant drought, which then linked into flooding. So 24.7 million people affected by the consequences of drought, severe drought, and then by flooding. And we're seeing the impact of that. Climate is a great disruptor throughout the geographies that control risk operates in. Riddle mentioned elections. More than half the world's population in elections. India is in elections next year. That is a huge amount of goodwill, hopefully, in the democratic process. But the democratic deficit, question mark, and the effectiveness of that will put into severe question the efficacy of democracy in the global south. And that's to bear. And as a result of that, the confidence that will be in the results of these elections. And we're seeing some of that manifesting globally already. Linked to those elections is the trust deficit associated with the integrity of information going into those elections, the ability to bastardize information associated with what is happening, deep fakes, cybersecurity, and insecurity. We've seen in East Africa the paucity of security that has impacted some of our ability to work and operate effectively, and that is only set to increase. The pace, the cadence, timing of that risk is going to increase. And people have often thought that we don't need to worry about cybersecurity, that's a Western problem, it's a Chinese problem, a big market problem. It is not, it is all about problem. And we know for a fact that we're going, and we have seen, the influence, the trust deficit impacting the electoral cycle, and that is likely to increase this year, with billions of people going towards the election. Finally, linked into that trust deficit, from a local perspective, is the confidence and the credibility that investors have in markets, in geographies, in regions, in countries such as Africa. And the lack of confidence, the lack of trust, the deficit of trust impacting investment decisions. And as you've seen, the casualty of that being quite often sub-Saharan Africa and the repatriation of funding or the movement of capital elsewhere. We live in an era of perma-crisis. Flooding today, Middle East crisis, which is going to be ongoing, Russia and Ukraine, Sudan, coming to its anniversary, or has just gone past its anniversary. Perma-crisis is a state of affairs. None of us, unfortunately, in this room are probably ever going to know a degree of constant stability. That period of time is over, and investors' ability to understand the market and to appreciate where opportunity exists within an era of perma-crisis is going to be fundamental. And the role of control risk is to emphasize where those opportunities are and how those opportunities can be captured. And so, I think perhaps at the top, Riddle's depressing story, perhaps, but the emphasis being on opportunity. So, it's a great pleasure that I'm here with Riddle, Mark, and Terry. I would ask them very briefly to give an introduction to who they are and where they are. And then from there, we will pivot to a set of questions, which I hope will involve a discussion here and a discussion amongst the audience. So let me start with you, Terry, who's arrived fresh and sparkly from, or relatively fresh and relatively sparkly from Tanzania, from Dar es Salaam. Tanzania, post JPM, has become increasingly a darling of investors to a certain extent. Credibility buys you confidence. The credibility is improving and increasing with the implementation of Sam Hassan and Wesley has some questions doing there. Can you tell us about where you are, what you're focusing on in Tanzania?
Thank you very much, and great to be here. Habari za asubuhi to my fellow East Africans. I, as you mentioned, just came in on the red-eye flight, so hopefully I'll still make sense as I make a few comments. My background is banking, which is why I've given up on suits because I retired from the banking sector, and I'm enjoying entrepreneurship, so the dress down style suits me very well. And of course, I'm enjoying the cool weather in Nairobi. Briefly on Tanzania, it is a very exciting market, but also a market that has got some interesting challenges that appear to be building up. I think of late, the biggest issue that was on the ground was power. That has gone away with the switching on of the first turbine under the new hydro power scheme at Nyerere Dam. But also from a real estate sector perspective, there's been a radical change around dollarization. Because historically in Tanzania, we have always enjoyed heavy inflow of dollars. We export more than $10 billion generally, and a lot of that is tourism, hence hospitality. But over the last 12 months, we have seen both a massive collapse in shilling versus the dollar, and an unavailability of dollars, as we mentioned earlier, and also a changing environment where dollar invoicing has become taboo or complicated, as we've asked. So the environment has some emerging risks. What we've also seen is continuation of infrastructure, which is obviously a hallmark of they call him JPM, the late President Magufuli. That policy is continued by the current president, Mohamed Samia Hassan. The issue there, though, has been that the government has announced a number of new ideas around infrastructure, but many of these haven't as yet arrived. I mean, the current standard gauge railway is probably the biggest project happening from an infrastructure point of view, and there's been extensions along that corridor. But the government has talked about a southern standard gauge railway line, which would open up the coal exports and the agri belt leading up to the Mtwara port, and a similar line from Dar es Salaam going north towards Tanga and then coming to Arusha via Moshi.
Can I just pause there?
Yeah, sure.
Almost on a cliffhanger in terms of what is going on in Tanzania. Let me just flip across to Mark, who hasn't had an opportunity to speak, so we've heard from Riddle earlier. Mark, CEO of Knight Frank, focusing on Kenya, broader experience globally, experience within Africa. Just a brief overview of what Knight Frank are focusing on in Kenya at the moment. And then I'll ask a slightly different question regarding the direction of travel that you'll see given the context, the macro context of where we are. So just a brief introduction in terms of Knight Frank and you.
Sure. It's morning, everybody. It's rare that I'm the ray of sunlight in a panel. I'm normally the cynic, so it's quite interesting to be sitting up amongst you guys who are all talking about crisis, and I'm going to be a bit more positive, I promise. So obviously, Knight Frank, we just celebrated our 25th year in Kenya last year, so we're now into our 26th year in Kenya. We cover all aspects of real estate advisory, so the entire life cycle of planning what to do pre-acquisition of a site, acquiring a site, what to do with that site. Our consulting guys will tell you exactly what to build, and then our agency and leasing guys will help you lease it and or sell it if you want to. Effectively everything to do with real estate development, investment, transactions. That's what we do, and we do it across the continent. We have offices in 7-8 countries across Africa, and our East Africa business is Kenya, Tanzania, Uganda, and we've been in all 3 of those markets for more than 25 years.
So from there, you said you're going to be the ray of sunshine. And a caveat here, I've known Mark since we were 6, so it is rare that he's a ray of sunshine. But if you're going to be that ray of sunshine, given the macros that we've described, given the overall environment, where are those rays of sunshine from a lived environment that we see perspective?
Okay, and for the record, we were supposed to have a pre-catch-up and we didn't really do it. We just had coffee and didn't actually talk about questions, so this is very off the cuff. There are a lot of positives. Riddle was macro positive about this region, and I think globally, if you look at how if the US is going to 2.7% and we're still at 5.5% East Africa, that's more than double, right? So the macros may be slightly longer term, but generally pretty positive. We are still pretty young as a market, and I'm talking about sub-Sahara, maybe excluding South Africa, in terms of the development cycle. We're a very big mixed bag, but there's a ton of opportunity if you look at markets that are ahead of us on the cycle. If you look at, for a long time we looked at South Africa and then now more the UAE in terms of markets that we're growing towards or aspiring to be like, there's still a lot of space between us and them. And within that, a lot of opportunity. I think a mistake that people make is that they want stuff to happen a lot quicker in younger markets. And they also assume that the quantums are going to be as big from the get-go. The reality is we're still a pretty shallow market in terms of the amount of wealth that sits in these markets. But there is a lot of opportunity. You need to be smart about what you're doing and doing it right. People are still developing assets in very advanced, very developed markets just by looking carefully at where the opportunity lies and where the niche is. And here it's not dissimilar, right? It's where are the opportunities where are going to be the opportunities in the next 24, 36 months. We've seen developers come into this market and try to do things off plan, and it hasn't worked because nobody really understood what they were doing, or they didn't trust what they were doing, which is a bit of a cultural issue that we're seeing a shift in terms of, if the asset doesn't exist, I'm not going to give you any money. That's a historical cultural issue here. Now we're seeing people who've come in and said, right, fine, we'll build it, and then people will see that we're serious, and we're going to build to an international kind of grade A quality, and occupiers will start to fill that space, and we're starting to see that happen more and more. So we are becoming a more sophisticated market. I think that we also have a really unique opportunity, like we did in the mobile phone era, and I don't know how many of you were in East Africa when mobile phones came out, but we ditched the landline very, very quickly and adopted the mobile phone, a lot like M-Pesa, right? We're very good at jumping ahead of Western markets if we see an opportunity to do that. We're not doing it so much in the real estate space yet, but I think there's a massive opportunity in the real estate space, particularly as AI starts to help with the efficiencies of development. There's opportunities where we can say, right, yes, traditionally we follow the path of those that have gone before us. We tend to even borrow, at a state level and a government level, we tend to borrow manuals and things from other markets that are now out of date, whilst the other markets are developing the new ones. I think there's an opportunity for us to leapfrog all of those people and say, we're going to tear up those books, we're going to do things completely on our own in a novel way, borrowing from the experience of those other markets that are far ahead of us.
You mentioned shallow, the depth is too shallow.
Yeah.
And let me just come across a little bit, pick up on that point of shallowness, as it were, to talk about crowding in, scaling up, and speeding up investment, and the credibility that's required to do that. So Mark mentioned perhaps there's an opportunity to leapfrog, but there's a degree of credibility required for investors to believe and the brand to be able to leapfrog and do that. I completely agree with Mark on that point, with the room to do that. But how do we crowd in, scale up, and speed the level of investment into real estate and infrastructure in Sub-Saharan Africa and East Africa in particular, given the competition for capital and where East Africa sits within that context? I'll pass it to you.
Yeah, no, sure. Just taking a step back, I've been covering these markets, and I say these markets, about 18, 19 of these sub-Saharan markets for the past 15 years. And it's the first time that I'm seeing over probably nearly half of our markets under IMF programs. And while there's always been a lot of criticism around these IMF programs and that they tend to be fairly generic, the reality is that these programs were needed at a time when we just came out of the COVID pandemic. And we need those programs just to ensure that we return to, as I mentioned earlier, a more sustainable public finances and debt landscape. And also just putting growth back on a more sustainable path. Now, what does that mean? It means that if you did overborrow in the past, that you need to just, downscale or reduce that borrowing and get healthier before you start running again. So to answer your question then, there's certainly an element of getting back that credibility so that investors can buy into the story. Otherwise, they will not invest in your market. There are already some green shoots. I mean, I just talked about the fact that we saw over $1 billion coming into the Kenyan fixed income market. And also, I didn't mention it, but Uganda also saw some inflows. And we think that Uganda is very well placed to get some of those inflows. Now, yes, those are short-term capital flows that can leave at any point. But it does tell you that there are investors out there that's looking at opportunities. The same for FDI. The FX shortages have obviously been a huge constraint and a huge turnoff for anyone that wanted to invest, even in the corporate sector, into this region. The fact that Kenya has been able to largely erase those FX issues, Tanzania has still got some, but it's clearly working on it. Uganda doesn't really have as a magnitude of issues as they are fairly flexible. It does tell you that we are probably now entering into, as I mentioned, the tide has turned, entering into that new shall I call it, living cost crisis environment. And we should hopefully see a lot more investment coming in. Now, that investment doesn't necessarily need to be in one sector only. We do know that Uganda is probably a year or two away from producing oil, and there's a huge focus on expanding oil-related infrastructure. Kenya is looking for a strategic partner to invest in its oil sector. We also know that Tanzania is potentially sitting on $30 billion of LNG development. So huge focus on that sector. But there's other sectors as well. You know, from mining to agriculture to finance, telecommunication is also quite popular and getting a lot of support from elsewhere. So funds will come in. Some of them might be multilateral funding. Think about Kenya's $12 billion World Bank funding that's coming its way. Others will be bilateral funding. But as long as governments continue to show the kind of commitment to reform by pulling in the IMF to boost their credibility, I think that bodes very well for the IMF.
And if I may, now to come back to you, Harry, because we've seen that shift in Tanzania. We've seen increased confidence and credibility. It's relatively early stages, but we've seen that change or that potential shift. We're heading to elections, as I mentioned, next year. The mandate of Her Excellency may then generally be hers if she wins. We hope she does. We assume that she probably will from a CCM perspective. Where do you see that, given Lindy Mutwara, $30 billion over 30 plus years, North Mara data from a gold mining perspective, the blue economy around Zanzibar and Dar es Salaam and beyond? Where do you see that opportunity from your perspective as a CEO leading in this space?
Yeah, thanks. I didn't sort of do a plug on my business as Mark did earlier. So I am in the real estate sector right now, so quite knowledgeable about what's happening. Just to touch on, I think, what Rido said, and then to come to your point. Generally speaking, Tanzania has a very balanced economy. And whether you talk tourism, minerals, impact of the infrastructure, and then it's scattered around the country. Obviously, we're almost 1 million square kilometers in size. So this balance has created pockets of opportunity. I mean, you briefly touched on Zanzibar. Obviously, that's seen an explosion in hospitality investment, and also in tourism numbers. Well over 1 million tourists will visit Zanzibar this year. So that's significantly higher than what we saw pre-COVID. Now, interestingly, on tourism, I'll just sort of deep dive on that for a second. The president did a royal tour campaign about 18 months ago, and all the players in the northern part of Tanzania are happy because tourism has returned. But if you actually look at real growth, it's sort of gone back to the pre-pandemic levels in the north and has exploded in Zanzibar and hasn't really changed in the southern circuit, which the government has been pushing, or accessing the Serengeti and the parks in the west or Lake Victoria. So I think there's a dynamic of inefficiency or a kind of a herd mentality. If people feel a certain area is doing well, and they all rush in and invest, and then they sort of forget and overlook other pockets of opportunity. If we're talking about where is real estate investment happening, from a hospitality point of view, it's happening in Zanzibar. In Dar es Salaam, for the first time, we're actually seeing significant industrial demand. People are looking to acquire assets because obviously the port has been growing, is largely out of capacity. And the infrastructure that's been going on in Dar, which sort of leads to the port, has created significant interest in that sector. I think part of it will map these corridors of infrastructure, and part of it is just around the port itself. So industry has arrived, or is arriving now. and industry and logistics in Dar, and also residential. But in terms of the type of investors who are pushing these transactions, it's actually not multinationals or typical corporates that you would see, for example, in Kenya. It's generally Chinese-led investors. And these are people that are not, let me say, sort of formalized and easy to trace, either in terms of knowing who they are and what their sources of cash are, but there is heavy expenditure happening. So when you drill down to look at these different sectors, you find that, or different geographies, you find that these sort of inefficiencies or little patterns that are specific to an area and that don't, are not observed elsewhere.
I think we probably have 5, probably 6 minutes of that left. I want to try and end on a high note, collectively, very good. I want to focus on the opportunities. Every year, Control Risk produces what's called the Africa Risk Reward Index. Last year's focus, for example, was associated with logistics, cold storage. I see ALP's flyer there, the lived environment as a whole, and significant opportunity associated with that. And there is a significant amount of opportunity there. Data centers, for example, which was mentioned earlier as well. Real quick, if I could ask you almost in a phrase to capture in the next 12 to 24 months, where you see that strategic opportunity into this Africa, where would you see that from a real estate infrastructure lived environment perspective?
Yeah, like I said, I mean, I touched on some of the issues earlier, but I think the environment is ripe for that kind of confidence to come back into the sector. Where do you think energy sector, renewable fossil, or fossil fuel? Where do you think the fact that other than maybe Tanzania, that interest rates should really stay flat from here on. I think that once US rates, for example, come down, that'll not just be positive for our own currencies, but also for our policy rates. So in a short amount of time that I've got available, there's just so much. I think of so many different issues or trends that's becoming favorable for the region, so that this post-pandemic growth can finally take off that has been delayed. Eric mentioned the fact that China is investing. There seems to be increased competition between China and US or Western countries developing, where the US is also very mindful of maintaining its presence in the region. But also, I think that as these economies become more healthy, the confidence in the local economies will also start growing for local investors to start, building capacity and expand operations. So I do think that there's a lot of favorable trends happening here that can underpin this strong growth that I mentioned for the region.
Mark?
Yeah, historically, these markets have been driven by private local investors, developers. And I think my ray of sunshine for the end of this session is that when I have conversations, and I've just spent the last 2 and a bit weeks in Europe and in the Middle East, when I have conversations there, yes, maybe the scale's slightly different, the quantum's slightly different, but there's crisis everywhere. So, historically, people would worry about the risk in this part of the world. They're starting to either understand the risk more or realize or appreciate there's risk everywhere, right? And the difference is now we have showcases of real estate assets that have done well, that are of the type of investment grade, let's call them that raise the eyebrows of Western money and even Eastern money. So I think Kenya, and particularly Nairobi, is the gateway or the showcase of how that's being done in East Africa. And off the back of that, there's now going to be more and more opportunities in the region. But I believe we're now getting to the stage, which is really interesting, where these crises in the Middle East and in Europe, slowdowns are starting to make people look this way more than they have. They've always been looking this way, but people have been reticent to commit because there hasn't been scale or case studies to show them that there's actually a sophisticated enough market here to come in and invest and get a return. Now we're getting to that stage where we can actually show them we can do it. And so now it's an exciting time to go and have those conversations with foreign money and bring them in to either support local investors and or do their own thing in these markets. So bullish, but long-term bullish. I think that if you take a step back and look at the market, now is probably the most exciting time that I've looked at it for a long time. Even though we're in a kind of bit of a slowdown here in Kenya, particularly, the reality is 24, 36 months from now, I think we're going to be in a very different, very positive space.
That's what I'm standing in the way of you and a coffee and burning a red eye. So I'm going to leave you with the parting shot regarding where you see opportunity next 12 months before. That's it, yeah, of course.
So I would say that I touched on a couple of the themes. Industry logistics, very attractive area to invest, following particularly these corridors of infrastructure. Hospitality, also very dynamic, fantastic yields, and I think pockets of opportunity. I mean, Moshi, for example, which is next to Mount Kilimanjaro, it's probably only got about 600 rooms available for accommodation. Compared to more than 5,000 in Zanzibar. So what's happening there? Which is maybe around 2,000 rooms. So I think if investors are going to pick their battles, they can find these pockets where there is underinvestment, and they can still achieve very high yields. If they're really dynamic, then they can do different things like implement blue economy in Lake Victoria. Because Lake Victoria, particularly the Monza area, there's dozens of islands. You can see them when you're in the mountains in town, scattered around the lake. Mainland governments are talking about blue economy from a mainland perspective. They talk about Zanzibar perspective, but why not mainland? And we've seen tons of big investors doing projects in Zanzibar. I think the same thing can happen on the mainland. The last one I'll touch on is residential. I think the yields from a residential investment point of view are very attractive, particularly in Down, and particularly in the prime areas, Westlands, Kilimani, industrial type areas. So I think there is significant opportunity to invest. Retail, commercial, I will not touch. The student housing, I think there's question marks about offtake availability. So I'll stick to those.
Ladies and gentlemen, I hope you found that as insightful as I did, as a starter for a conversation, a much broader conversation. I'm very grateful to you, Mark, Henry, being part of this conversation, and really looking forward to listening to what comes next. Thank you very much.
Thank you very much, Robert. Round of applause, please.